You are listening to chartingwealth.com for Wednesday, the 26th of September, 2018. Lots of good trainings at the end of the program today. How to use the daily market worksheet. Trend lines, one of two trainings that we have, so you can understand those and how to employ them in your trend following, along with an introduction to charting for those of you who are new to what we do. And of course, our book video tells you all about the book that I have written that is available for you. One way you can help support the channel and our important work. Why don't we go through the four charts that we go through? And can you use the information we share with you here on any chart? Absolutely. Absolutely. What we are doing for you every day is presenting you with this important information and training so that you can understand how to chart. And you can use what you learn here on any charts, whether it's the S&P 500, whether it's the Nasdaq 100, whether it's 20-year bonds, or whether it's a commodity like gold. You can use it on stocks, you can use it on bonds, you can use it on commodities. This kind of training works over and over again on a number of different platforms. So we want you to practice with us every day, no matter what your interests are. Let's jump first into the S&P 500, down for the day 0.11%. How is the week shaping up? Well, on our weekly candle, which is where we go to first, we always look at the big chart first, then the medium chart, which is the 2-day chart, then the 4-hour, our short chart. And again, we trend follow. We don't forecast. We don't prognosticate. We don't have a magic crystal ball. What we do is we follow established trends. And is a trend getting ready to change? We have a gold trend line that shows us what's going on with the weekly chart. And so far, we have a red candle that's forming. It's a red open box candle, so it signifies a little bit of caution. But we see the derivative oscillator continuing to lose upward momentum. And the price percent oscillator right now is headed down, not really close to crossing yet, but headed down. So we're watching that, still in a confirmed up move. Now the 2-day chart is in a confirmed down move since it crossed over going down back on the 7th of September. Now you can see since then the chart's actually moved up as far as our Heiken Ashi candlesticks go, and we'll offer that training again probably later in the week. You can find it at the end of the podcast. You can always go to our website, chartingwealth.com. Look up the Heiken Ashi candlesticks. I think 90,000 people have taken that and loved it. And we do see, though, that the up movement was not enough to have the 2-day chart cross back over going up. Derivative oscillator stayed in the negative. Price percent oscillator heading down. And this latest candle is a down candle. That doesn't change the fact that the 2-day and the weekly are moving in opposite directions, which means we don't have a trade, so we're waiting to see how that shakes out. 4-hour chart, of course, crossed over going down in the morning on Monday the 24th, and maybe that's bottoming out somewhere right now. We'll just continue to watch and see. Derivative oscillator gaining momentum, price percent oscillator heading down. That's where we are on the S&P 500. We don't have a trade yet. We're waiting for the 2-day and the weekly to move in the same direction so we can jump into something. Now, we go to the Qs, the Nasdaq 100. It was up for the day 0.14%. We have a red spinning top, means indecision tending down, has blown through the weekly trend line. Why? Because we've actually had a change in trend. That occurred when we had the weekly vertical crossover going down at the end of this past week. And we see the derivative oscillator now has turned negative, and the price percent oscillator, the blue line's moving away from the red signal line. We go from the weekly to the 2-day candle. What do we see there? Well, again, that's a red spinning top, indecision tending down, price percent oscillator still heading down, derivative oscillator losing some downward momentum. So we're keeping our eye on things. Now remember, we've got both the 2-day in a confirmed down move and the weekly in a confirmed down move. So we have the ability to jump into a trade. What's going on, however, on our 4-hour chart? It's still moving up. Didn't have a jumping in point on Monday. Why? Because after 10:30, we saw the charts moving up, and they moved up throughout the course of the day on Tuesday. Once they do reverse and crossover going down, then we have a jumping in point, if indeed they do. So we're holding our breath and waiting. Derivative oscillators losing momentum. Price percent oscillator still heading up. If and when this 4-hour chart crosses over going down, the 2-day and the weekly are in the same down direction, we're going to pull the trigger on a virtual trade and write it down. The reason I say virtual trade is because we don't give market advice. We're an education firm. We want you to practice with us. You get good. You learn what we have to teach you and what you learn from any other trainings, books, practice, whatever it might be, developing your own method. Then and only then can you decide when and if to spend your own money. But that's not what we're telling you to do. We do tell you to practice that, though. And again, we got a great training on how to use the daily market worksheet to help you track what you're learning each and every day. Now, TLT, 20-year bonds. Remember, we had that weekly vertical crossover going down back on the 14th. That was the week ending the 14th of September. We're going into our second week of down movement. My friends, that is the beauty of the weekly vertical crossover going down. That's that big wave crossing over, jumping into that down move and riding that pony, as we like to say. Price movements below the 2-day trend line. We can go ahead and actually draw a weekly trend line. Probably should have drawn that at the end of last week. Derivative oscillator gaining momentum, price percent oscillator heading down. 2-day chart, again, continuing down. Derivative oscillators losing a little downward momentum. Price percent oscillator still heading down. Now, we told you to keep an eye on that 4-hour chart. And again, down in the morning, up some in the afternoon. It did cross over going up in the afternoon, so do be careful. Again, nice down movement, and again, for the day down almost 0.1%, not a huge down movement. So just watch. The play may be over, may not. If things really bound up, if you didn't pull the trigger, getting out, taking your gains in the afternoon, just keep your eye on things. It could just be digesting some down movement. It could head down further. But if it blows through the 2-day trend line and really starts to pull away from the red signal line on the price percent oscillator, the derivative oscillator is already positive, you might pull that trade and then jump back in if there's another crossover going down. Now, again, we're talking about an inverse trade because remember, we try to make virtual dollars when the market's going up or down. You can do that by getting into an inverse fund. We'll post some more training on inverse funds in the next day or two. We posted it yesterday for you. You can find it under trainings at the website or at our YouTube channel and learn more about how to make money when markets go down as well as up. I found that it's easier, in my book, I've found it easier to make money when markets are down because most people just don't figure that out. And so give that a try. Practice that. Okay, that's where we are as far as 20-year bonds go. That's still looking okay for us. And lastly, we go to gold. What's gold doing? Well, we're waiting for gold to cross over going up. Derivative oscillators already positive. Price percent oscillators getting closer and closer, hoping that gold finds a bottom. Price movements above that 2-day trend line. Of course, the weekly's still in a confirmed down move, but maybe it's soon to crossing over, maybe by the end of the week. What do we see on the 2-day chart? Well, derivative oscillators losing upward momentum. Price percent oscillator still heading up. We basically see a sideways slide underway. Again, tending down right now. So again, just keep your powder dry. Pay attention. Let's watch what happens. 4-hour charts in a confirmed down move as far as the price percent oscillator and derivative oscillator go. But again, we're seeing a sideways slide. Price movements above that 2-day trend line. So we'll continue to watch. Maybe we'll have a weekly vertical crossover on gold going up at the end of the week. Maybe not. If we do, we will be looking to jump into that perhaps over the course of this next week. Folks, that's where we are as we end the day. Like I said, please consider purchasing our book. You'll see that training posted as well as the training on the daily market worksheet. Trend lines, one of 2 trainings. We'll put the other one up tomorrow, and the introduction to charting. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.